Caterpillar. Honestly, never thought about this as an energy company. I've pretty much been only familiar with the big construction equipment that Caterpillar makes, but they actually compete with a company that we've covered quite a bit here at Chip Stock Investor, GE Vernova.
Casey, tell the chip stock investors out there why they should care about a company like Caterpillar. Does this really seriously fit into the semiconductor and electronic supply chain?
I'm glad you asked, Nick. It sure does. It fits into that yellow bubble there on the bottom left, specialty energy and service equipment. Caterpillar supplies some specialty energy equipment. It actually fits into the infrastructure part of our hierarchy of the economy chart. Their products help build out this layer.
So data may be the new oil for the digital economy, but you still need energy and fossil fuel products to power the whole thing, the traditional economy and the digital economy. And that's where Caterpillar fits in because they do a lot more than just supply construction and mining equipment.
We have this chart brought to you by our friends over at fiscal.ai. We have revenue and total order backlog, which we're going to expand on here for Caterpillar. But you can make cool charts like this one and analyze businesses like this one and many others, in fact, thousands of others over at fiscal.ai. And you can get 15% off any paid plan with the link here in the video and then the description below, fiscal.ai/CSI.
And this is a very telling chart if you're trying to figure out why exactly Caterpillar stock has been on such a run as of late. Because in blue, their revenue, it's pretty sleepy looking the last few years. Not much is going on, but that order backlog, you can see the big nearly $10 billion jump in backlog from its customers just this year alone. We'll come back to some more fiscal.ai charts here in just a moment, but like so many other things as of late, you can basically blame technology and specifically AI data centers as the reason for a lot of stocks running higher. In fact, this is where a lot of Caterpillar's backlog is coming from. Now they have this whole digital side of their business, connected equipment and analytics, and they cite some key partners like Nvidia, Microsoft, and Snowflake working on that. But the real secular growth trend that has pushed Caterpillar higher is AI data centers and the electricity needed to power those things.
Now, before we dig too deep into these numbers, Nick, I want to go back to this slide where we have the backlog for Caterpillar. And backlog is a metric that we also look at with GE Vernova as well as a number of other companies. What exactly does that mean?
That's a good question. It's a popular metric now that everybody is so heavily invested in building out infrastructure of various kinds. Backlog is the value of customer orders that has yet to be complete. So it's a metric that you might use to indicate future revenue for a company, in this case, for Caterpillar.
And a lot of that is coming from the very far right in these secular trend end markets under E&T or energy and transport. Up 200% global data center electricity demand from 2023 to 2035, and around 50% increase energy mix from oil and gas in 2035.
Mm-hmm. Yeah, and of note here, Caterpillar says mega trends for all three of its segments. CI is construction industries, RI is resource industries or mining. Those two segments that we'll take a look at here actually have not really been a mega trend at all, not really a secular growth trend at all. But Caterpillar thinks after a few years of more muted investment from its customers in these areas, those will begin to heat up, perhaps starting right now and through 2026. But really, the actual super cycle is coming from that E&T segment.
And this segment is, I think, talked about so much: data center energy demand. Caterpillar estimates the future energy needs through 2035 for electricity demand globally, and on the left and then on the right, the data center electricity demand up 200% by 2035.
Over the last decade and a half, really going back to the great financial crisis of 2008, Electricity demand, especially in places like the United States, was pretty flat, not much growth at all, but that is starting to pick up some serious momentum because of data center power consumption. And of course, AI being the big workload consuming and needing all of that extra electricity. And so, what exactly does Caterpillar do to help with this problem, with this electricity need for data centers? They have this nice infographic, their own little supply chain showing where they operate, going everywhere from upstream all the way to downstream, as well as on site power generation. Caterpillar is a competitor with GE Vernova in natural gas power generators. They also have diesel power generators. So throughout the supply chain, but especially on-site power using diesel and natural gas to power data centers, they also make lithium-ion battery energy storage devices too.
In addition, those last two on the bottom under products and services, asset monetization and service and maintenance, of course, have a lot to do with some of their software stack.
Which goes back to the previous slide. The Caterpillar showed some of their technology partners on items like those last two, Nvidia, Microsoft, and Snowflake. But the real catalyst, to borrow the energy industry term, for all of that backlog growth that Caterpillar believes will translate into lots of revenue growth in the coming 5 years especially, is from on-site power, especially for data centers. So with so much power shortfall, energy grid providers aren't necessarily interested in expanding as quickly as data center operators would like them to. So a lot of those data center operators are turning to on-site natural gas and diesel power and purchasing equipment from companies like Caterpillar to get the job done.
Let's take a look at Caterpillar's revenue segments. On an annual basis, we have this broken down into 3 parts. Orange is construction industries, purple is resource industries, and red is energy and transportation.
And as we've been alluding to, you can see the orange and the purple, the construction and the mining portions of Caterpillar for the last 3 years have not done much. In fact, they've contracted a bit since the last cyclical peak in 2022. Hot on the heels of the pandemic and lockdowns and a lot of the infrastructure shortages that arose from that. But since then, the real actual growth driver of the business, especially since 2020, is the energy and transportation revenue. That's where Caterpillar logs those sales of its on-site power equipment.
Now, for comparison's sake, let's take a look at GE Vernova and their revenue segments. The big blue one at the top, power revenue, that's what would correspond or overlap with Caterpillar's energy and transport segment in red on the last slide. Wind is in orange and electrification in green.
And for GE Vernova, as we've discussed in past segments, the wind segment has been a headwind for the company, sort of offsetting some of the power revenue segment. And that's where GE Vernova would report its own sales of its natural gas turbine equipment. But what GE Vernova does have that Caterpillar doesn't, to a certain extent, is that electrification segment that more squarely supplies the actual energy grid. And you see over the last 4 years, the CAGR for that has been mid-teens, nearly 15% revenue CAGR for GE Vernova, and that has actually increased to upwards of 20% as of late. That is the key growth driver for GE Vernova and a segment that Caterpillar doesn't really have a comparable for, not directly anyways.
So Caterpillar may be a more vertically integrated company versus GE Vernova, which supplies the parts that make electrification and transportation possible.
Yeah, think of it more like a picks and shovels play for the power grid itself, be that the actual grid or for companies that need to generate the power on site. Now, that said, Casey, Caterpillar's revenue actually pretty sleepy looking, but what the company really excels at is something else entirely, profit margin expansion, right?
In blue, diluted earnings per share with a CAGR of 17% for the last decade. So really, really strong earnings per share growth. And then on a free cash flow per share basis, that's the green line, CAGR of 11% over the last decade. So maybe the revenue's looking a little sluggish, but still expanding profits.
And Caterpillar has been making some investments into these new secular trends for their business. And that would be one of the reasons why the growth rate for free cash flow has been lower than GAAP earnings per share over the last 10 years. But over the next 5 years, the company does expect to see a bit of a pickup in their sales, in revenue. They're in the top line, at least 5% CAGR through 2030. And they actually increased those operating profit margins. They're now looking at 25% operating profit margin if and when their revenue hits the $100 billion per year mark by 2030. A lot of that will be driven by services, incremental software and services, connected technology, analytics. You can see that line they have listed is targeted at being 30 billion in 5 years. But a lot of this growth and profit margin expansion going to be driven by that on-site energy, on-site power generation business that the company has been talking about as of late, including in their investor event in November.
Well, to round this discussion out, let's do a reverse DCF for Caterpillar. This is just one scenario that gets us to the current stock price of around $600. Trailing 12-month GAAP earnings per share of $19.48. Earnings per share growth of 14% for the next 5 years with a terminal growth rate of 5% thereafter, and a discount rate of 10% gets us to that fair value of $600.
It's worth mentioning here, this is obviously just one scenario based on the stock price. At the time we actually recorded this, it was around $600. So obviously these assumptions, if you're running a reverse DCF, will change all the time based on the stock price. But there you have it. If you want to learn more about how to run DCF calculations, or more specifically, the way we like to do this one specific valuation thing that we do, reverse DCF, kind of reverse engineering what expectations are, join us on Semi Insider, where we talk all about that and have a new research platform that we are building out, including a DCF calculator. But the big question here, I guess, that everybody is probably wondering about, do we like Caterpillar more than GE Vernova? Is that why we made this video?
I don't know. Is that why we're making this video?
Actually, the reason we're making this video is Caterpillar and GE Vernova both recently had investor updates, and AI data centers, of course, were a big topic. So we felt like Caterpillar needed to be added to that list, and it's obviously been a very well-run business for a very long time. Not something we have room for ourselves in our portfolio personally, but one that you might want to keep an eye on because it's not an ultra-high growth business. You'll, of course, want to keep a close eye on the valuation metrics and buy at a fair, reasonable price.
Come see us over at chipstockinvestor.com, where you can get that membership to Semi Insider, live events, Discord, all of our research on that research platform. Take care, everybody, and see y'all soon at Chipstock Investor.